Hello, everyone. Thank you for joining. My name is João Pessoa. I cover the Brazilian soybean market at S&P Global. I'm here alongside José Roberto, our price reporter responsible for soybean meal, and Gabriela Brumati, our price reporter responsible for biofuels and soybean oil. This webinar is expected to take around 40 to 45 minutes, with 10 minutes after that to answer some of your questions. Let me go through our agenda here first. So yeah, this is our agenda with the main topics that we will be addressing today. All right, so let's start. So I'm going to talk about the soybean market and more focused on Brazil. So when it comes to soybean production and also exports, we can see here how Brazil has increased even further its relevancy in the market. So now Brazil accounts to 40% of total global production and accounts to more than 60% of the global trade flows. This year, we had a very good crop, a record crop once again with 182 million tons. And we continue to see Brazil as the main reference in the global soybean market. And led by Brazil and also by strong production growth in other countries, we can see that global inventories have reached its highest levels in history. And I'm also going to go through some price charts, starting with Brazil here. I want to show you guys our assessments. First, the Soybex FOB Santos price assessment for the spot market, which is the one in green, and also our new crop 2027 price curve, more noticeably on the March curve. So we can see a very traditional seasonality here. Since the Brazilian crop is basically on the first half of the year, we can see that prices at this period tends to be lower. And then as we move towards the crop and Brazil starts to export its crop, to sell more of its crop, we see that prices continue to increase and reach their highest levels of the year, basically during the second half. So in this next slide, I'm putting together the Brazilian FOB Santos price versus the U.S. FOB Gulf price here as a reference. Just I wanted to show you how we see a very traditional seasonality between both of them. However, over the last few years, due to geopolitical factors, more specifically the trade war and the tariff dispute between U.S. and China, we saw this seasonality, I would say, changing a little bit. So the tariff environment had a very strong impact on the price relationship between these two, especially last year when China concentrated all its demand on Brazil, and we saw Brazilian prices actually higher throughout most of the year versus the US. So the main message here is that participants in the global soybean market should consider local benchmarks in terms of decision making, because the premiums, the basis, can represent more than 20% of the total price. But I want to go deeper into this analysis, and this is the same chart as before, but starting in January 2022. Historically, Brazil and U.S. prices had a very strong correlation. So the correlation between them had been more than 95%, 99% at some times. However, this correlation has been falling over time. So we reached around 53% in 2023, 60% in 2024, and last year, only 30%. So is 30% the new reality? No, it was basically an outlier because of the tariff dispute. So now we're starting to see this correlation come back, but the main message here is that Brazil is becoming a price maker. Brazil has always been a price taker, but now we see Brazil becoming a price maker in this market. So that is why the correlation has been falling. And when we look at demand, we can see that China concentrated a lot of its purchasing in Brazil last year. Last year, we had a record in terms of exports from Brazil to China with more than 85 million tons, which represented almost 80% of Brazilian total exports. So this is the highest share since 2018. So I'm going to move on to José so he can talk about a little bit about soybean crushing and soybean meal.
Thank you very much, João, and thank you very much to all the audience who has joined us today. As João said, I'm José Roberto Gomes, price reporter for the Agriculture and Food team, based here in São Paulo, Brazil. And I'm going to say some words about the Brazilian soybean crushing, the Brazilian soybean meal and oil production, supply and demand, as well as price oscillations for both commodities over the past few years. So to get it started, well, you all know, but just to bring it here, when we talk about soybean crushing, we are talking about the process of extracting meal and oil from raw soybeans at an average yield, an average rate of 78% for meal and 19% for oil. But I would say that the most interesting part of this slide is the Brazilian map on the right, which shows where the Brazilian soybean crush plants are located, and that they obviously follow the soybean producing area. So talking about Center West, where the top producer Mato Grosso is located, this region accounts for 45% of the installed capacity here in Brazil, while the South region, where we have other two key producing states, Paraná and Rio Grande do Sul, this region accounts for 34% of the Brazilian soybean crushing installed capacity. Now, bringing some numbers, some figures, some data. The Brazilian soybean crushing has been increasing consistently over the past years. Over the past decade, it has increased by nearly 60%, moving from around 40 million metric tons to more than 60 million metric tons. And even amid this larger volume of soybean crushing, its share compared to the whole soybean production has decreased because Brazil has been producing lots and lots of soybeans with a record of more than 180 million metric tons. So this soybean crush share compared to the soybean output has moved from more than 40% 10 years ago to something around 33% nowadays, while of course the share of export has increased a lot, moving from just something above 50% to more than 60%. Talking about the products and start with soybean meal. Brazil is used to be the second soybean meal exporter and producer, just behind Argentina. And its production, the soybean meal production, has also increased consistently over the past decade, around 60%, 59% to be more precise, moving from something of 30 million metric tons to nearly 50 million metric tons. But the key what I would like to highlight from this chart is that given this rising production, the surplus of soybean meal in the Brazilian market, since 2021, 2022, the share of soybean meal being exported is higher compared to that one used domestically. So now Brazil has been exporting more than consuming domestically, given, again, this highs in production that is a direct result from higher crushed volumes in the country over the past few years, over the past decade, right? Talking about soybean oil, it has a similar pattern compared to soybean meal, an increase of around 60% over the past decade, jumping from 8 million metric tons 10 years ago to 12 million metric tons nowadays. The key driver here for this increase, for this growth is, of course, the soybean oil demand for biodiesel production. And when we talk about biodiesel, Gabriel is going to say more about and bring some more information, some more data. But when we talk about biodiesel, we are talking, it has a direct correlation with the availability of soybean oil to be exported. So if the demand for biodiesel is higher in the country, there is less soybean oil to be exported. Over the past decade, the soybean oil demand for biodiesel, the soybean oil use for biodiesel jumped from 2.5 million metric tons to 7 million metric tons. And in 2021, 2022, when there were some setbacks in the biodiesel mandate here in Brazil, with some cuts in the official, the mandatory mixture of biodiesel into diesel, there was more a surplus of soybean oil to be exported. And it was by that time that Brazil exported more than 2 million metric tons of soybean oil in 2021, 2022, as well in 2022, 2023. So there is this correlation involving biodiesel and soybean oil and the availability of soybean oil to be exported by Brazil, right? Now moving to the prices, Platts has price assessments for FOB Paranaguá for meal and oil. We also have for FOB River in Argentina, talking about South America. And the idea here is to give a brief historical of what has happened to the price of these both commodities, considering the relevance of Brazil for these markets. So starting with soybean meal, this chart shows the highs and the lows, the historical highs and historical lows for soybean meal prices in the Brazilian export market. Back in 2023, there was a historical drought in Argentina, the largest exporter, sorry. And by that time, the prices in FOB Paranaguá, they jumped to nearly $600 per metric ton. We had another brief rise by the end of 2023 when there were some concerns regarding the South American crop, but then the price went down, pressured by these higher crushed volumes in key producers and the subsequent ample global supplies. So by the mid-2025, the prices went below $300 per metric ton. So in a period of around 2 years, we saw the prices moving from historical highs to historical lows. And now in 2026, there was an uptick in prices, considering fueled by the impacts from the Middle East conflict, logistical issues, rising fuel costs, and in Argentina there was a moment of reduced farmer selling and their harvest delays that also impacted prices. Now talking about soybean oil, as I said, there is this correlation with biodiesel, and last year, by the beginning of the year, prices remained relatively stable around $1,000 per metric ton when there was no increase in the biodiesel mandate here in Brazil. It ended up occurring in August, so the prices by that moment moved up to around $100 to $1,100 per metric ton. And finally this year, given again the impact is all the turbulence generated by the Middle East conflict with crude oil prices skyrocketing, we saw the soybean oil prices at FOB Paranaguá going to as high as $1,250 per metric ton, right? This oil meal share I'm just brought here because you can see that the share of soybean meal moved from around 70% to 3 years ago when we saw those historical high prices in South America to something more close to the oil share. So now we see the soybean oil prices supported and the soybean meal price more pressured, and there is this movement in the oil meal share, again, considering the FOB Paranaguá base, right? To conclude, some questions, more questions than answers, but there are some things, some topics that we must pay attention, need to pay attention to see what will be the impacts for the soybean meal, the soybeans, the soybean oil prices, the price of the barrel heading amid these conflicts and trade tensions. It's a year from the next government regarding the economic and social. The next Brazilian soybean crop, there is this rise in fertilizer costs amid the Middle East conflict. So how will plant intention be affected here in Brazil? El Nino, will it be a super El Nino? What could be the impact on the Brazilian crops? And finally, will the biodiesel mandate in Brazil increase? Gabriela might help us with this. So thank you very much, and then pass along to Gabriela. Thank you.
Thank you, Jose, for this introduction. It's a difficult question to respond, but I'll try to respond it. So thank you very much for this opportunity. Thank you for all our audience here. I'm Gabriela Brumach. I'm the price reporter responsible for the biofuels coverage, specifically biodiesel. So I'll start sharing with you a few insights about soybean oil and how these insights are connected with the biodiesel market as well. So to start our conversation here, it's important to show you how our basis is changing during this year and throughout 2026. So it's clear to see that our basis for soybean oil, both in Paranaguá basis and in FOB River, that is another region that we are assessing here at Platts, both of them are really discounted in record levels, levels that we have seen in 2023 when vegetable oil markets face historically low physical basis levels despite the rising CBOT futures. And the fact that we hear from market participants as the main reason for this discount this year is the fact that both Brazil and Argentina, they continue to have a record harvest or near record soybean crops, and they are supporting this elevated crush activity that Jose described, and with that, the abundant soybean oil supplies that are making this discounts. But it's interesting to notice how this reflected on the flat price results. So in the second chart here in this slide, you can see how the CBOT prices increased during this year. We have 2 points of attention: the Middle East war escalating, and another point, the RVO announcement. It was a very important moment when the U.S. Environmental Protection Agency announced biomass-based diesel blending mandates for 2026 and 2027, and that was a key driver behind this move with the biofuel mandates, the 45Z tax credit rules, diesel margins being announced, and with all of that, the soybean oil and CBOT responded to these levels. But at the meantime, both in Brazil and in Argentina, we see that prices were following stability with this basis discounted compared to the levels that we were facing on CBOT. And this is interesting to notice in terms of prices. Here you can see in blue, in the blue line, the CBOT soybean oil level, and in the orange line, the soybean oil FOB Paranaguá in dollar per metric ton. So comparing the level from January to the end of May, we can see that CBOT prices increased by more than 60%, while the soybean oil on a FOB Paranaguá basis increased by more than 9%. So that is the variation. And it's interesting to show how the vegetable oils complex was working during the same period. So here we have two other prices, the palm oil FOB Indonesia and the sunflower oil FOB Black Sea. And all of these markets were not following the same reasons, the same fundamentals that were guiding the CBOT prices. So while CBOT was reflecting in a specific U.S. domestic and regulatory scarcity, export markets such as Paranaguá, Black Sea, and Indonesia, they remain more tied to global supply fundamentals, and they were relatively comfortable with these fundamentals. So Paranaguá with the South America abundant supply, as I said before. Black Sea sunflower oil more stable because it has fundamentals of local supply driven fundamentals and logistics and availability of the material. In Indonesia, following a different price logic, and also influenced by crude oil, but also influenced by its own biodiesel blend, the expectation to reach a 50% blend from the current 40%. So the domestic market guiding this other vegetable oils complex as well, while CBOT became this U.S. domestic market tied to the U.S. domestic market. Specifically talking about Brazil and soybean oil here, it's important to highlight how the soybean oil production is connected with the biodiesel blend. As Jose highlighted, we had during some periods some setbacks between 2021 and 2022 in the biodiesel blend. But the fact is that right now we have the Fuel of the Future law in Brazil. That is a law that is predicting that the country is going to increase 1 percentage point in its biodiesel blend into diesel each year until it reaches 20% in 2030. And with that previsibility, some industries made some investments on the biodiesel and also in their own crush. But we have the soybean oil production responding here to this mandatory biodiesel blend. So it's one of the main drivers of the domestic soybean oil demand in Brazil. As the mandatory blend rises, crush industry tends to operate at higher utilization rates because the domestic market begins to absorb these increasing levels of soybean oil. And obviously, we see some seasonality here at the end of each year. It's clear to see that soybean oil production is reduced, but it's something that happens every year. It's seasonal. It's reduced by the maintenance period of some plants. But the fact is that we have the industry, the biodiesel industry, absorbing this demand for soybean oil. And another interesting point, it's something that I'm going to give you more details ahead, but we had the expectation to reach 16% blend this year for the biodiesel industry. Following the Fuel of the Future law, this increase of 1 percentage point was expected to be reached every March, and that not happened this year because we need to advance with some feasibility studies. So here at the end of this chart, you can see in gray, in light gray, the expectation of our analysts for the SBO production. And with that, you can see also that our analysts are maintaining the blend in 15% this year for this analysis. So we are considering the blend in this level until we have more information about the feasibility studies that need to advance in the country for us to have higher blend mandates in the country. But talking about higher blends is not just about talking about the availability of the raw materials or not even the idle capacity, because we have an idle capacity for the biodiesel industry right now in the country. We have about 50% of idle capacity. The industry estimates that it would be possible to reach B21, which means 21% of blend with the capacity that we already have in the country. But besides the capacity that we have and the availability of the raw materials, we are talking about prices when we talk about this decarbonization agenda and the increase in the biodiesel blend into diesel. In terms of cost perspective, it's clear to see here that biodiesel costs were operating in the first half of this, in the first quarter of this year, higher than diesel costs. And this is something historical. We can see that the biodiesel cost of production is higher than diesel. But this curve's inverted with the start of with the escalation of the Middle East war. So we can see here in March that both lines crossed and we reversed this spread that was established between biodiesel and diesel with the war. The war was a risk, added a risk for all energy markets, and this was reflected in the diesel market. And despite we had some price increases for the biodiesel industry as well, and some cost increases, especially talking about methanol, for example, that is a product that it's needed for the biodiesel industry, and it was a cost increase with the Middle East conflict. The diesel market faced more changes with this conflict. And here we are sharing spot prices for biodiesel, but the more than 80% of the volumes traded for the biodiesel industry right now in Brazil are traded via contracts. So it's interesting to see how it was the same movements, including contracts here. We are including 4 different regions in Brazil, and all of them normalized to a Paullinia basis. So what is interesting to notice is that both contracts and spot prices were operating really close in the beginning of the year, in the first quarter of the year. And before the sector could foresee the escalation of the war, there was a very abrupt discount that was that happened in the contracts in March. And then the war had its developments, and although there were some attempts to adjust the contracts during this period, they were already very discounted. There was a pressure from distributors to maintain these levels. And what we can see from March on until the end of May is that the spot price was operating higher than the contracts, and the contracts were most of the times lower than the diesel levels in many situations during this period. Here, just give you some details about the contracts. So as I said, the market negotiated around 80% of the volume by contracts in Brazil. And these contracts happen every 2 months, and with the spot market operating with the remainder. So in the map here, you can see that that margin that is negotiated during the contract period can vary significantly depending on the region, and mainly because of logistics, feedstocks costs, and local supply demand conditions. And contract negotiation between producers and distributors are often a tug of war. So distributors push for lower prices and are looking for their backlogs and the demand for diesel, while producers try to recover higher costs, protect their margins, and are always looking for soybean oil costs, that, as you can see here in the chart as well, the level of contracts and the costs for soybean oil. So for this period that we are now under negotiation, that is July and August, we are seeing the mills trying to do some improvement as well. They are considering this higher costs, while distributors are trying to maintain their persistent pressure again, and using as a reason the fact that they have these backlogs, that the demand is not so strong in the domestic market. So just wrapping up, it's my last slide here. It's about S&D for biodiesel. So here we have the expectation of our analysts for supply and demand, the production and the consumption for biodiesel. What we can see is that supply and demand have been moving together during this period, and our expectation for 2026 and 2027 are still considering the 15% blend until we have more information about the feasibility studies. In the end of May, the Brazilian Ministry of Mines and Energy has formalized a plan to evaluate these technical feasibility studies for blends higher than 15% and up to 25%. So this was published, and we saw that these studies are starting, but we don't have yet any information about when these studies will be concluded, and this uncertainty is making the sector remains this level of production and consumption as well. Another factor that is important to highlight, as José said, we are in an election year. So in terms of biodiesel, any regulatory change can be challenging in the second half of the year, considering we have these federal elections that we had historically, those levels of biodiesel costs operating higher than diesel, and a perception in the sector that any blend increase could mean inflationary concern in the domestic market. So any change in terms of the biodiesel regulation can be challenging during this year. Of course, that we have to observe the Middle East conflict. It is expected to have repercussions in both biodiesel and diesel market. Even if we have some solutions, some agreements, it's possible to see some delay in the domestic response. And soybean complex, we have right now this ample supply that is creating the structural pressure, but El Nino is also an uncertainty, is approaching, and is already a concern for the next cycle. So that's it from my part. I think right now, João is going to conclude, right? Thank you very much again.
Yes, thank you very much, Gabriela. Thank you very much, José. Before we start answering some of your questions, I would kindly ask you to scan the QR code on the screen there to access our soybean WhatsApp channel on WhatsApp. So we are posting a lot of free and a lot of content there. So I'm going to give you a few minutes to scan that, and then I'm going to answer some of the questions we received. All right, so I have one question here, and it's for the Brazilian soybean market, so I'm going to take this one. So the question is, what are the expectations for the upcoming 2026-2027 soybean crop in Brazil? So we are seeing some challenges for this next upcoming crop here. The first one is the rise in costs. So we saw an increase of almost 6% in fertilizer prices for this year. We're seeing more than 11% in terms of crop protection products as well. And prices haven't been that good for farmers. So we don't know. There have been a lot of questions if farmers are going to increase planted area this season. And my expectation is that if it's going to increase, it's going to be very minimal. So I'm not expecting a very large area growth this season. And we have another challenge that Gabriela talked about is the El Nino this year, which is expected to be a very strong one. And in this case, we normally see a lot of rains in the southern part of Brazil, but the main areas of production, especially Mato Grosso and the center west, tend to be a little bit dry. So this is a matter of concern that it has been on the radar. But considering that we don't have any problems and even is a very minimal increase in planted area, Brazil should harvest a crop higher than 182. So for now, I think these are the main challenges here that we have. We also have another question here. I'm gonna ask Gabriela this one. How do you see, Gabriela, the current and future blend levels affecting Brazil's soybean crush margins, soybean oil and pricing, and the country's broader position in the global oilseed complex?
Yes, thank you, João. Yeah, thank you for this question. I think from pricing perspective, the mandate creates a kind of demand floor for soybean oil prices, and also for the demand of this raw material, and then and this can reduce the availability for exports at times, and cause domestic soybean oil prices to be partially decoupled from the international benchmarks or international references. But as I mentioned during the presentation, we still have a lot of uncertainties surrounding this biodiesel blend in the country. We have a law that provides some kind of previsibility, but we also have some pushbacks in some situations, and especially this year we have the decision that and the ministry has been really clear about that we need to advance with the feasibility studies to have this blend increases. So with the feasibility study that is expected to cover not just the B16, the 16% blend, but from 16 to 20%, it's possible to see more previsibility and with more predictability to connected with the blend policy. It's clear that we will have stronger incentives to crush and for the biodiesel investments in the country, of course. But right now we have a lot of uncertainties in the market. The fact is, looking ahead in the next few years, we have an expectation to have a market stronger for SAF or even for HVO and other advanced fuels in the country. And while we have right now Chinese demand prevailing for soybean oil, in the future we can imagine that since biofuels are advancing, we're going to have more opportunity for the soybean oil complex to be tied to this biofuels development as well.
Thank you, Gabriela. We also have a question for José. José, regarding soybean crush this year, what can we expect considering the latest data released? I think this is for Brazil. I don't know. Can you answer this one?
Yes, thank you very much, João. Thank you very much for the question. Yes, yesterday we saw the Brazilian Oilseeds Crushers Association, ABIOV, releasing its official data for April. A total of 5.6 million metric tons of soybeans were crushed in April. It came in line with the expectations from our research team, the S&P Global Energy Sierra. But answering this question, so considering the fact that the crush margins continue to show profitability, there is this resilient soybean meal and oil prices amid firm demand from both domestic and export markets. By we, I mean our research team. I'm considering their data, their figures. They see an upside potential for the soybean crush this year. So our estimate is 62.5 million metric tons for the current season, and there is an upside potential for this volume. Let's see, for the upcoming season, the 26-27 season. Just to bring here these numbers, I guess it might interest the audience. We are expecting 65 million metric tons of soybean crush. So this is it. Yeah, there is an optimistic view for soybean crush this year.
Thank you very much. I'm going to leave our contacts here so anybody can send us an email, or if you have any additional questions you want to ask us, or just stay in touch. We are available and hope to see you guys on another opportunity. Thank you very much and goodbye.
Thank you.